The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. We've got a vote coming up. I'm not sure if it's already done. Market seems to think it's done. The Dow was down 80-something points. It's now earlier in the morning. Then it came back, it was strong. Then it went weak again. And now the Dow's up 45. It's up 0.18%, but the S&P is up 0.42, up 11.65 at 2821. 0.9. The comp index is up 49 as 73. Is that 88? Yep. And this is going to be very interesting because you've got the E-mini here in the leg E in the Chapman wave methodology, the daily chart. Monthly chart, weekly chart is an F/B. It's this 120-minute chart that just really spiked powerfully above the 28.15 high that was made earlier on in the day overnight. This is a big move because the MACD and stochastic are very strong. How does it hold all the way through to the close of the day? That's going to be very interesting to me. And I'll explain what I'm looking at here. There are periods where the market, if it's going to pull back, it says, I'm only going to pull back a little bit because I've not completed, this is my basic in the Chapman wave methodology. I've only gone to, say, a C in the weekly chart. I need to still go to a D, so any pullback is going to be, even if it's deeper and a little lengthier than one would expect, it's still going to go to a new high because it's only after the D, the fourth highest peak, that you can start to consider a much deeper and longer consolidation is going to be likely. So I'm running through over the weekend just dozens and dozens of charts on the NASDAQ everywhere. Well, it turns out that if you go, let me just see if I can do that now. Let's just go to Amazon. I'll get to all the numbers in a minute. Amazon is up 22. It made a peak E about 5 days ago in the daily chart, and the technicals were good. They weren't great. The stochastic was not very good at all. And now all of a sudden you've got a strong move, but it is still quite a bit away from the 1340. What was that? 1339.94 high, all-time high of the 16th of January. The weekly chart, yeah, you can make it as if it's a B rather than an F. MACD and stochastic are strong. Monthly in E. And as I went through so many charts, maybe there'd be an alternative count in the weekly. Most of them have the alternative count as one of the letters that I look at above D as being at the potential for a deeper pullback. So let me just run the numbers, and as we do that, we'll go through everything that I'm looking at. The Dow right now is up 46. The all-time high is at 26,153. It is just an eye blink away. All it just needs is just, like a one little eyebrow lifted up, and it's on its way to a new all-time high. The MACD is good. Stochastic is at 92%. Above 80% is good. Above 90% is very good. And above in the 95 to 97% is about the highest you can get. So we were at 92% in the daily, but 98.56 in the weekly. That is really strong. And the MACD is very strong as well. And the monthly chart is stochastics at 98.67%. So what I said to subscribers over the weekend is that there are still so many charts, not just 5 or 10 or 20 or maybe 70 or 100 charts that I looked at where the dailies are at a point. It doesn't mean to say they have to turn down, but they're at a point from where you could get a pretty severe pullback. But I have to keep in mind that the weekly and monthly charts, even there, are mostly very good. So I'll just give you parameters. A close today above 26,153, especially if it goes into the 26,200 level, I just have to say, you know what? We're not ready for a pullback yet, and it's raised the base of support, and that's really important. If there is a close a very disappointing close where the Dow up 46 now, actually up 48. So only closed, pulls back and is like plus 20 or even goes minus. That's going to be a hint to say, hey, things are not all that well in Denmark. Now, what we're looking at is the S&P. At this particular point, a stronger percentage move. Could this be an instant restart? Well, it has all the ingredients. I'm calling it E for now in the daily. MACD is very strong. Stochastic's very strong. And all I can say is I'll give you parameters. And that is a close. It's at 28.21 right now. A close anywhere above 28.18 would say, hey, that S&P is not letting up. It is very strong. It is a pullback that gives most of the gains away, and the S&P only lands up maybe +2 or even goes negative. That would be very negative. So what I'm saying is, until we get the actual price point of the reversal, you have to consider that, at least in this phase, the bull move is still on. If you look at the QQQ, the NASDAQ Index 100 power shares spiking in leg D, a very strong leg D. It's right at the resistance. This is the up channel. It's right there. It's testing this green line up channel resistance. It's up 1.24, up 0.75%. That's very strong. And it's at 167.59. What's really important is that the weekly chart is still very strong. It's getting close to its own a separate resistance line. This comes from the parallel up channel, and that can take you all the way to 170. It's at 167.58. As I say, it's only a sharp reversal later on that says, disappointment. Strong weekly, monthly chart, leg C, that is really still strong because it should still even get to a D. Now, this is going to be very interesting. The IWM is up 0.28%, up 45 cents at 159.05. It hasn't taken out the previous high of 159.41. So we've got to keep an eye on a couple of things here. That says, not everything's working, but at this particular point, we have got a very good rally against this backdrop of the vote. Let's see where it takes us. Now, I also want to look at the GC, which is the gold contract. The gold continuous contract is down $2 at 1331.2. It needs to hold this 9-period exponential moving average support of 1327. If it doesn't, it could quite easily test 1322. So far, this is just a high-level consolidation. Those are the parameters to watch. It needs to break into the 1340s to really say, hey, I'm in play and I'm going even higher. Silver's the same thing, except that my disappointment has been that silver it's had 2 days in which it had a chance to close above the 9-period moving average, the 200-period moving average, and the 200-period simple moving average. It's been below all of them, and they're all turning down. This is a little bit of a disappointment to me to say that gold has had a good move, and it keeps having these good moves, and then it takes a period of time to consolidate. Maybe it's in the consolidation phase right now. If you're looking at high-grade copper, still under the 9-period exponential moving average, it's been since the 4th of January, every single day has tried to get above the 9-period moving average, close below it. That is at 3.207. It's trading right now at 3.19. It's having a tough time. After the break, we need to take a little time to look at bonds. We need to look at crude oil. We need to look at interest rates. We'll take a little time looking at those interest rates. I'll be right back. Basil Chapman, Dow's at 53, S&P's up again. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, well, so crude oil right now is up 24 cents at 63.55. It's pulled back from that peak E top that it made the daily chart at 64.84 on the 16th. No big deal, just a high-level consolidation so far. That's what it looks like both in the daily, the weekly, and the monthly. Let's see. So I wanted to spend a little time here on, there we go, on the triple yield chart. Here we go, weekly chart. And this is saying that the 30-year, the white, the TYX, trading at 29.11, down 1 penny, right there, hasn't taken out the high that was made back. Why is that line there? Okay, the high that was made at 29.44 the week of the 12th of January. Got real close today, made a higher high than last week at 29.28. So there's a little way to go. But what is really interesting is that the 10-year TNX made a new recovery high. It's trading at 26.46. That's the 10-year. And if you're looking at the 24.48 level of the 5-year, it's only in legs seen and made a new recovery high this week, Monday. So that means that for the entire week, these all three charts have made higher highs. So this is something to watch, and I think that this is going to be part and parcel of what we look at as it maybe impacts the housing sector. If it's going to, this is going to be one of the reasons. So far, yields are still historically very low, but we've got to watch that because the 10-year in particular, the TNX, trading at 26.46, that's the one to keep your eye on. It is higher than it was back in March of this year, and that goes back to December. Yep, December of last year that's the 26.21. So let me just double check. Yep, we're above that. So that's going to be something to watch. Now, there are a couple of things that are going on as well. If I look at the very long-term TLT, which is the 20-year Lehman T-bond fund, you'll see that this 200-period exponential moving average in the weekly chart right there has been tested a number of times over the past 6 months. What's going to be very interesting is if the low that was made back in January, the week of that's the week of the 12th, if that low of 122.66 is going to be taken out, because if it does, then it'll point to the 122.42 level, not much lower, that was made in October, and you get step by step to the downside after that. So this is going to be more important for seeing whether or not the longer term yields are going to start to push high. Remember, they were kind of flat, but if that yield really starts to increase, you will see the TLT really break down and go into the 121.50 area. That's going to be key for me. It's at 123.31, and as I said, let me just do that again. The low that was made at 122.42 back in October, that's really the issue. If you're looking at the inverse, and for my subscribers, we've had the inverse on our radar for a couple of days, for about a week now. Why? Because this might be a play to see the longer duration, the 20 and 30 years, start to move up sharply. So far, we haven't seen that. And that would impact the TBT, which is the inverse, the ultra short Lehman 20-year T-bond fund, and it's trading at 35.76. If it goes above 36.08, the high that was made on the 10th of January, that starts leg C. Not only does it start leg C in the daily, it starts a new leg C in the weekly. It's what I call a gray leg C because it's underneath the previous high, and that was the high that was made, what did I say, October? Yeah, that would have been October at 36.78. That was the low. Of course, the inverse, it would be the low in the yield. So this is going to be very interesting. Not only that, you're slowly getting, although it's a very jagged one, you're slowly getting this kind of pattern that says there's a cup formation forming, but the monthly chart is really the issue, because all you need is to have a slide back below 33, and then that pattern changes completely. But you need a push into the high 36s, and all of a sudden that's a very active pattern, that cup formation. So we've gone through just about everything I want to look at. Okay, now we can go through questions I had. The XLF. The XLF is up right now. It's in leg E at 29.62. No sign yet of a top, other than the letter itself being leg E. In the XLF, the S&P Select Financial Spider Fund, leg D continues in the weekly, leg E in the monthly. So you can see when I put this together, what I am seeing is that this is one of those times where we've got the daily, the weekly, and the monthly at letters that have the potential to form some kind of a top. Technically, I just don't see it right now in the XLF. The KRE, which is the regionals, has a slightly different chart formation. It's kind of working hard to get above the high that was made on the 16th at 63.15. KRE Spider S&P Regional Bank ETF at 62.91, down 12 cents. So I've said before that I think this is a laggard. Later, I think that the regionals are going to do very well as the economy filters into towns and cities, the locals, and that's when I think you'll see the regionals do very well. So looking out, still very positive, a weekly and monthly. Just the short term says it's doing very well, but it hasn't broken out like the XLF, not quite as strong. Next question I had is the IYT. Yes, I'll look at the IYT, which is the iShares Transport Average. Stuck in a range. 206.73 was the PE high in the Chapman Wave methodology at 206.73 on the 16th. It's just gone in a rectangle formation. 202.23 is the 9-period moving average daily support. And the MACD's okay, it's flattening out. Stochastic's weakening. It's at 78%. I'm going to be watching this very closely because there's a sign that says getting a little toppy, but it only says real toppy if it starts to close under 201. It's at 202.23 right now. So that's the IYT. A question I had was, where did it go? Oh, it's over here on this side. TBT KRE, yep, I did that. Another question I had was, what about my Dow quartet? Well, GE has just been horrible. A little bit, I tried to find a base this morning. It's down at 16.07, down 19 cents. It's in its own world, and it's in a real world of hurt. I'm not sure if I can really keep it in here as one of my Dow quartets. It's really telling a completely different story to almost everything else. IBM is trading right now. It is up 26 cents. It made, did I finish there? It made an island reversal. Let me just type this in here. And that's just a sign to me to say that island reversal. There was some question about the cloud. There was some question about has IBM turned the corner? Are they in? There was some talk, I think, about blockchain, etc. No, I think IBM right now is digesting these very big gains from under 140 to over 170. Taking a bit of a time out. The weekly chart is okay. It has 158 key support, and the monthly chart is also okay. I have nothing bad about it right now. I'll be right back. Basil Chapman, the Tiger Technicians Hour. Dow's up 67, S&P's up 12. We'll be right back after these important messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. So we're looking at triple to continue my Dow quartet of GE, IBM, Triple M, and UTX. Triple M is down $1.41 at 246.77. The MACD is good, not as good as it was back when it hit 244.23 late December, but and the stochastic's flat at 88%. That's good. So the main support is at the 244 level where the 9-period moving average is. We'll watch this over the coming days. Leg E in the weekly chart with the MACD and stochastic just pulling back with stochastic still at 91%. leg D in the monthly chart, and UTX, United Technology. I think they come out with earnings this week, maybe. Trading after 137.73 high last week. It's trading at 135.09. Just kind of, we've seen many charts make this kind of little H pattern, so it's going to be very important what happens next. There's no other way I can count this. The weekly chart is extremely strong in leg B, so I suspect that this is going to be one of our clue stocks, UTX, leg D in the monthly chart. How far it pulls back, if it does, at 130 level, it's got really strong support, and the weekly chart so far is very strong technically. So I was asked about that, so I just did that. Now, a question about overview of the market. So basically what I've been doing is we love the steel area, so our steel stocks doing very nicely. Love the financials, bank stocks doing very well. We love the infrastructure. Some of the infrastructure stocks that we have, the infrastructure stocks that we do have are doing well. And we still have General Motors, that's auto. That's going to be a tough one. It's up about 9 points from where we bought it. But at the same time, it's we'll see what happens. It really needs to get from the 43.30. Let me just show you GM right now. GM right now so it's up 24 cents at 43.39, and pulled back really sharply from that last peak. And the weekly chart suggested that this is not such a good sign. It should have done much better. So I'm just watching it very closely. I think out of the autos, it's one of the better ones looking out. That's the way I'm looking at it right now. And we have a gold stock, because gold is starting to show a little bit of strength, not as much as I would like, but it's in the area. And we have 6 longs. We have 2 shorts. One is a Dow short. We're still short that, haven't been stopped out. And the other is we just got into a home builder on Friday as a short. We'll see, because that's also partly interest rate related, but also on the chart itself started to look like it could. One of the best stocks you've seen, but it looked like it was starting to get somewhat toppy right here. Okay. Now, the next thing that I wanted to do is what was the question? Over the weekend, in response to the charts that I sent out, a question was, how was it phrased? I can't see it in front of me here. In looking at the top NASDAQ stocks, what would you look at to see some kind of a pullback that could garner downside strength? So let me just do this. We'll go back to the Qs. The Qs right now, very strong, up 0.80%. That's good. It's up $1.34 at 167.68. But I want to put it together with the SMHs. So the SMHs right now up 71 cents, 107.50. They've snapped through the resistance, that very strong resistance in the 105s. They're 107.49 right now. MACD is good. Stochastic is good. The weekly chart technicals are not nearly as good as the price is intimating, but and it's got a cup formation. The weekly chart is in leg E, looking very good. So how do I assess? Well, I like to put a whole bunch of things together. And what I'm really looking at is, if you look at Apple, Apple's kind of struggling since it made its peak E-top at 180.10 on the 18th at peak E, and it's now holding the 9-period moving average. I would have to see Apple slump below the 174, 173 key support and close below that. That would impact the daily to make it a sell mode, but it would just begin to say, now the weekly chart, you've got to be a little careful here. Right now, holding very nicely, but off its all-time highs. If you look at Amazon, look, Amazon is having a strong day, up 21 points today at 1,315. It made a high on the 16th at 1339.94. To see the negative action, I'm not talking about positive. Positive just means it's going up, right? But to start to see a negative bias means that the 200-period moving average, which is, I meant the 9-period moving average is at 1284. You would have to see Amazon not only close below it, it would really have to get into this little gap of 1256 to 1254, the gap that on the 11th. somewhere in there, and you need to see it. I would say that it needs to be by this Friday. You need to see Amazon really weakening. That's the only way you could start to set up any weakness in the weekly chart and the monthly chart. If you look at Netflix is making an all-time high as we speak. It's only a leg C in the weekly chart, so that's very good. It's bumping into a resistance line, and it's leg E in the monthly chart. So far, nothing wrong with this chart, other than to say there's a bit of a divergence as the stochastic has pulled back, but that MACD's fast-moving average, the 9-period differential, this is very strong. What would I need to see? At 226.10, up 5.65, I would have to see Netflix start to close below 216, 10 points lower. Look, it's just made 5.5 points today. So 10 points should not be a big deal down if it's going to start to change direction. And that's what it would take on a short-term basis. 216 to 214, that's key support. You go under that, Netflix is now going to have, at least on the daily chart, some kind of a problem. Google, I'm still calling it Google. There's, of course, Alphabet, leg E, very strong E. Daily, very strong E. Weekly, very strong E. In monthly chart, you'd have to see something, and I'll just emphasize this again. For there to be a bear phase, instead of every day seeing the S&P futures up about 3 points to 5 points, and they may be pulling back, and if ever there's a pullback of 15 points or so, it gets bought immediately. Until there is a sharp move in the futures overnight that holds through the early morning, there's a rally that fails and it closes sharply lower. The volatility index, which is now back below 11, it's at 10.85, starts to scream into the 13s and the 14s. It has to close at the high of the day to sustain selling momentum. But even more important, there has to be news that the market perceives as bad news that filters in and stays there. Until we get there, we will not get a sustained move to the downside. That, to me, is imperative. I've been saying it for about a year. It hasn't happened. And until it happens, this market is like a cork in water that just keeps popping up every time there's any selling pressure. The thrust of the gravity of the pull of the upside is activated, and it just goes right to the top. So that's why we have to look at it right now. Dow's up 82 and S&P's up 14. So let me go through this again. Within the context of the different markets, if you're looking at the NYA.X, this is the New York Stock Exchange, the very broad New York Stock Exchange, NYA. Oh, I missed it. I'll get it when we get back. This is going to be a key tell as well, because the NYA is in fact breaking out in a leg F to the upside in the daily, D in the weekly, and a D in the monthly. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I forgot completely to do the dollar because it was a little bit up last night, then it started to pull back. Now it's about minus 0.6 at 90.58. It's very interesting because there's a cluster formation here at the bottom, but it hasn't been able to break above the 9-period exponential moving average of 90.95. It's at 90.57. So until it can really garner some upside towards the 9130s, 9170s, dollar doesn't seem to be participating at all. But it hasn't broken down further, and that's good. It's been stuck in this between 90 and 91 range for a while. You've got a euro up just a fraction, high-level consolidation. So if I was to do anything normally, I would just grab this, put it in a circle, and say, okay, I don't know if I can call this a stalk leg because it hasn't used time for that body of the stalk leg. You really need a long sideways move, and then you break to the upside. So far, this is just a circle, and this is just saying this is the range, but it isn't a rectangle. So far, it looks very much like a circle. And if there's a break in the euro-dollar currency pair at 1.2238, if it can snap into the 1.234 area, 1.234, all of a sudden, that's going to really improve the daily and certainly the weekly chart and then the monthly chart. And at this point, the 200-period exponential moving average in the monthly at 1.213, that I would say that should be some kind of a support. And 1.204 is the weekly 9-period moving average, and 1.217 is the daily 9-period moving average. So there are a lot of key support levels. Let's look at the USD JPY, which is the yen, the dollar-yen currency pair. And that is a very strong candle, much stronger than the dollar. It's at 111.15, up 0.35, but it's still stuck within a range. And until the the dollar-yen currency pair can break decisively to a leg B, making it 111.65, really. It needs 111.85 to 112.10. That's an area that I'll say, aha, now we've got a pretty decent bounce. Maybe the dollar can bounce. And that would probably impact gold and silver. This is the way the relationship I'd give it just for the moment. Sometimes they work in counterpoint, sometimes not. The dollar and the gold over periods of a year very often travel in the same in counterpoint direction most of the year, but they go in parallel motion, not to the same extent, but kind of in parallel motion for 4 to 6 weeks, maybe twice a year. That's what they do. So we'll be watching that very closely. What I did want to do is to show you something very interesting. For subscribers, we looked at wood. This is the iShares Global Timber and Forestry ETF over the weekend, as I always do every weekend. It's one of the things we do regularly. And I was saying that we're going to be watching this very closely because it had a good week last week. So any new high this week just increases the leg E in the daily, leg G/C in the weekly, and leg C in the monthly. Now, what's really important about this monthly is there's a trend line resistance that is at right now in the monthly. So we're going to see whether or not there is some reaction here, whether we start to see a pullback or a breakout. And a breakout would be a push from 76.02 up 8 cents right now into the 77s. Question, Basil, can you please see an entry price for a long position in PPLT? Aha, PPLT coming up. PPLT is the ETF physical, platinum physical. Let me just do this quickly. Go to the bottom here. I've got platinum. It used to be all notated. I'll check to see if it... Oh, that's the reason why. I wondered why I lost some charts over the weekend, 87, 90, 88. Because I had an issue and TradeStation did something, and someone I dealt with was really good. Did the best thing that anybody's ever done there, because my complaint has always been that I lose my charts if there's a shutdown because of electricity or anything and it can't get saved. It goes somewhere, there's a library that comes back, and then I lose some current charts, and old charts come back, and I get old notation of stocks that I knew I'd done in great detail. This is one of them, the PPLT. So now an entry point. The PPLT, which is the ETFS physical platinum, so this is an ETN on platinum. It made a new recovery high today, and the recovery high was underneath the previous high in the weekly chart that was at 97.18 back the week of the 8th of September. I remember that's when the dollar made that low that gave a really good bounce. So that's 97.18. The high so far is 96.92. No big deal. It's only 20, 30 cents away, but it is a big deal because so far it's a failure. It's a gray A. Now, what's really important is the weekly chart is leading as a good move up technically and a good move up in the monthly. So what I'm going to say to you is this is going to be tough to do because it's in focus right now. In other words, it means this is like one of the sectors on fire. And because of it, I would say to you at 95.22, 94.50 to 93.48 would be the key support level based on the daily chart on a very short-term basis, not as short as the 120-minute chart, but even the 120-minute chart says, yeah, there could be another day or two of consolidation. So, Ruby, this is what I'm going to suggest. Start up if you have no position now, and that's obviously I think I'm reading that from your question in the den. I'm going to say to you, you could start a position. I would start a small position under 94.50. Ooh, 93.48. That's big. That's a point. That's 10. Yeah. Okay. So that's 10 cents. Yeah. I'm going to recommend that if you can have a little patience, this is going to gain together tomorrow and the next day, but I'm going to suggest that at 94.30 to 93.60, that's where I would start a position. So I hope that helps you, and we'll come back to this in a few days. Just keep reminding me, I'm going to write it down, and I'll try to come back to it, because if you look at platinum, I've got a call I'm going to go to right now. Platinum just made its leg D. It's a slightly different count, and it hasn't pulled back as sharply. And platinum itself continues, says 986 is the period. That's the area of support that I'd be looking at first. It's at 1,003.40. Let's go to Jerry in Boston. Jerry, how are you?
All right, how are you? Yeah,
well, thank you.
I'm trading a stock, and I'm thinking of adding to it. CRM, Salesforce.com.
So Salesforce.com is just an incredible company. They just seem to do everything right. And I'm looking at this at 112.77, up 84 cents. Did some work on this over the weekend, and I thought to myself, gosh, you know, I keep looking at it and I keep missing entry points. That is just silly because it walks the 9-period moving average support of 107.80. So just tell me right now, you're in a position or not?
Yes, but I want to add to it. Yeah.
Okay, so you're in a position much lower down. That's my question. Actually, should have been yours. Much lower down.
Oh, no! I bought it at 106.
Oh, way back. Okay, so this is about 6 points lower. Okay, that makes it much easier. Jerry, can you hold on? We got a break, and
sure.
I think I've got an answer for you.
Right.
Okay, I'll be right back, folks. The Dow's up 83, S&P's up 14. Basil Chapman, Tiger Technicians Hour. We'll be right back with Jerry in Boston.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. And don't forget, Steve Rhodes is coming up. Another great show with Dave Wine, and, of course, the one and only Tom O'Brien, back at 3 o'clock. So let's do this right now. We're looking at CRM, which is Salesforce.com, cloud-based. It's at 112.89. So Jerry is in lower down, about 6 points lower down. I don't want to say to him get in anywhere around about here, because his cost basis, if it starts to pull back over the next week, it means that he's raised his cost basis instead of having this lower cost basis. So Jerry, I'm going to say, have a little patience. Let's look at it again. If you see it trading it between 110.20 and 109.50, give me a call and let's see if that's the time to put money to work. At this point, yes, it could go higher, but the risk reward, I would say I'd much prefer to see you buy it about 2.5 to 3 points lower. That's just the way I'm looking at it at this particular point. I don't know if that helps you.
All righty. Yeah, I'm buying it on, I think they're going to report some really big contracts on their earnings report in early February.
Okay.
And their stock will...
So you got time. You've got time. I think that let's see if it pulls back a little bit, just in terms of, I'd prefer to see it pull back and then we do an analysis of it. But it's in leg E the way I've got it right now. Could pull back at any point. Let's just hold on a little bit.
All righty. Thank you very much.
Thank you for calling. Good eye, though. So, folks, let me just do this, give you the overview. Let's see how the market closes today. At this point, we've made a new all-time high in the Dow, made a new all-time high in the S&P. Finding the trend is not going to be a good sign. So we do have, as I say, for subscribers, we have 6 longs. We have 2 shorts. One is a Dow short, but we also have the Dow long from way down at 22,290, a position there. So it alleviates some of that risk. But in terms of the action right now, we have to see how the market, I don't know about the vote, I don't know what's going on, other than the market has responded very well to whatever has been said. Let's just see what happens. If there is going to be a breakout and a whole bunch of new highs, there are plenty of stocks that could move higher. I'm also looking at a lot of stocks that are looking real toppy, so we'll see how it plays out. Thanks for being here. Stay tuned for Steve. I'll be back tomorrow. Have a great day. Check out my opening call.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.